Ross Givens here at Precision Volume Alerts. Today I want to show you two stocks I just recommended to new members because I think they're a great tool for learning what to look for. Both of these are small cap stocks. They're low price stocks. They just made big breakouts. So I'm going to walk you through my thought process and the exact setup I look for to identify these breakout stocks, because breakouts are by far the best way to make big returns and make it very quickly. And that's really your goal as a trader, to compound your money to produce high percentage returns in as short a time as possible. So let's go to the chart. Now here's the stock. As you see, I was trading as low as around $4 back in October. Just had a big breakout candle today and popped to a high of $7. And I'll highlight that here on the chart. You'll see here's the big breakout candle that took place today, and here's the big volume spike. Now, the volume is the big telltale sign. What you want to see is 5 to 10x your average daily volume when it breaks out of the range. So this stock normally sees about 78 to 80,000 shares traded a day. Today, it traded 850,000, so you got about a 10x volume surge on this breakout. And this stock, like many others, is very good about rotating from price acceptance to price discovery. You may have heard this referred to as like forming a base and then a breakout. It doesn't matter the words you use. The structure looks like this. So each of these yellow boxes highlights a base, or as I call it, a price acceptance area, where the market has somewhat agreed upon the price of the stock. And then you'll see a spike in volume, and this one's kind of hard to see down here. Because the volume's been so high, the scale's off. But you'll see the volume went up here and went about 5x what it normally is, which triggered a push higher. Now, this breakup ended up failing. It fell back, formed a second base in this range. Then once again, big volume spike. The stock breaks higher, forms another base, and then we got this breakout today for a push higher. And that's really what you're looking for. Each one of these should have a clearly defined acceptance range in the base. It should have a breakout candle that reaches above that base, closes above the base on high volume. And then what you're looking for is a continuation of that price action higher. And what you don't want to happen is once you get above this, you don't want it back inside. Once it breaks out above this, it should get out and stay above this. So if you get in them very quickly, right as it's breaking out, you can you can risk very little money just betting the stock stays above the previous base, the previous acceptance area, and does not return back in. Now, this is the same setup we used in US Silica, ticker symbol SLCA. We got into this trade in January 20. You can probably spot where we got into this thing. So you'll see this one, it was a shorter kind of acceptance range in here, but you see it over here on the volume. And then we got this big volume spike here on January 4th, which broke out above the top. It closed above here. We entered this trade, and we're currently up around 53% on the stock over the last 3 months. And our options, which expire this Friday, are up around 250 or 300%. Now, I recommended one other stock as well, and it's going to be a very similar setup to the one I just showed you. Now, obviously, the big breakout happened today and that big candle you see here, but look at the same kind of pattern. You had an acceptance range right in here, marked up, had an acceptance range right in here, and marked up, and then we had a third and final acceptance range, base, whatever you want to call it, right in here. And each one of these was on the breakout higher. See, it broke above the box. It did so on high volume. Broke over the box, did so on high volume. Not as high as the others, but then we got this breakout, and it's happened on big, huge volume, and this stock is pushing higher as well. So that's the general setup I look for in breakout trades. There's other ways to use volume as far as pulling back these high volume nodes where you can get in very precisely on turnarounds. We did the same thing with Apple recently, and we're up like 7 or 8% on that stock in just the first week. Our options are up 50%, so it'd be pretty precise. But if you're looking for these kind of off-the-radar stocks, these breakouts, the ones that can run 50, 100, 200% in a fairly short amount of time, this is the best setup to find them. Now, if you want to learn more about this, or better yet, if you want to be alerted when we initiate these new trades, you want to learn all about the two I've just recommended to members right now, including the ticker symbol, the full write-up, all the technical patterns, and the specific options I've recommended to try to maximize our percentage gain there. I encourage you to become a member of the Precision Volume Alert service. If you're not familiar, I've got an on-demand training video. There should be a link below here where I'll take you through my entire methodology, why I use volume as my pretty much only indicator, how to use the volume roadmap to identify where the smart money, the institutions, the endowments, the hedge funds, where they're buying and selling, and how you can use that information to identify high probability places to buy and sell stocks, and how you can, it's going to give you a better way to look at the market and better interpret charts. So go ahead right now, click that link, watch the on-demand training. I hope you become a member of the Precision Volume Alert service, but even if not, I hope you learn something from this and put it to use in your own account.